Welcome back to another episode of Uncontested Investing. I'm your host, Nate Zielinski, joined by co-host Suzanne Andreessen. In today's episode, we're going to tackle a new theme. It's all about market analysis and timing. Today's first topic, though, Suzanne, for our guest is going to be emerging markets. So there's a lot that can go into this. It's all about kind of the timing the market at the right time, getting in at a perfect time for the investor to capitalize on a few properties before demand skyrockets. There's too much competition. Prices go through the roof. So it's all about how can we calculate the perfect time to get in on an emerging market. Where do you want to start?
Well, if we have the answer to that, we can solve anything.
Yeah.
I'm just saying.
We're going to do our best. I'll put it that way.
But, I think there's a lot of things you should look at. And you can buy in any market. Any market has potential.
Yep.
So, for example, buying in Pittsburgh from January to March is the lowest time the housing prices drop. It's cold. Mm-hmm. And it's, so people, and they really want to get out of there. So, so figure out when's the best time. Probably the version of that would probably be buying in Arizona in August when it's 115 degrees. So you want to pick the pain points, if you want to call it that. I'm not saying that it devalues it, but people
more inclined to sell.
Well, I was going to say, I don't want to say out of desperation. I was trying not to go down that path, but certainly more inclined to consider a lower price offer. The other thing, like Cincinnati, 20, 30 years ago was an industrial town. Mm-hmm. So as the metropolitan areas change, so does the desire to be there, or for different reasons, or going outside, like the Mayo Clinic. So finding the markets based upon what your acquisition strategy is going to be.
Yeah, I think it's important to define, right? Because some of it is going into cities that are a little bit under the radar, but it's those suburbs surrounding the cities that are really where the infusion can happen from an investor, right? You have cities like Suzanne mentioned, like Pittsburgh. I know Nashville was like this. Time has come and gone. Nashville is super popular now, but a decade ago, Nashville in the surrounding area could be considered an emerging market, right? So,
well, and a sister city to that is Memphis.
Yes,
and Memphis is now starting on the upward swing. Now's the time to buy. 18 months from now is probably going to be too late.
Yep. So it's often those overlooked metros surrounding cities that are kind of become the oversaturated market. So you'll see in the towns and the neighborhoods surrounding Nashville, that's where investors are going now. Nashville has been scooped up and I think taken by a lot. Yeah, exactly. A lot of bigger players have already moved in, staked their claim. You'll see a lot of buildings going up that aren't even completed yet, but a lot of that territory in a city like Nashville is spoken for. So you want to find, okay, people still want to be attached to Nashville, involved with Nashville, have Nashville just be like a 15 to 30 minute drive away. That's where you're going to talk about finding an emerging market.
Absolutely. And then there's, I'll say emerging strategies. So we touched on this in a couple episodes ago, where you've got the military, the Section 8, mm-hmm. and short term. So those are when you start looking, those are markets that are emerging, and certainly going near military bases. Those are that is a great strategy, and they're all over the country.
Yep.
So that you can pick on how that's going to marry. There's oh my gosh, Macon, Georgia is a great market for that military base and a growing emerging market. So there's things when, and that's like a double, it's probably a good high cap rate as well.
Yeah. And I think the last thing about, what investors should consider an emerging market, where they should be looking, the three big pillars you want to look for are the appreciation potential of the home or the investment property. You're looking to secure the increasing job growth, right? So are people going there for a specific reason? Like Suzanne mentioned, is there a technology hub, an automotive hub, a military base? All those things are driving population growth, which in turn is going to be population migration patterns. So where are people moving to? Where are they moving from? Try to find, the right time to pinpoint what an emerging market can look like and attack accordingly with a solid plan. So I think the next thing we want to talk about is why they should be paying attention right there. I'm sure they have portfolios that are working for them. They want to break into the bigger markets, but emerging markets are important as well. And I think it starts with that lower entry price, right? If we're talking about timing the market before that boom happens and people realize they're sitting on potential gold mines because a bigger migration is happening to that metro, you want to get in earlier and find that lower property value.
Well, and let's touch on migration. So there's some data sets out there that help you with that. Census.gov has migration markets that are great things for you to take a look at. There's also Atlas Van Lines. So connect with some, figure out, and these are available data. So if you're going to analyze a new location, and there's some, you hear this thing, don't put all your eggs in one basket. If you want to dabble, and I'll say leave Nashville and consider something else. Maybe you step outside of Tennessee.
Yeah.
Not just, to Memphis, but you step outside of Tennessee. And maybe you consider like Pittsburgh or Philadelphia areas where there's opportunity there. And but find the data sets that show you inbound, outbound. And there's some really terrific data out there that show you the growth over, 3-4 years. Take a look at the historical data. I think there's a great way for you to see not only age groups, but quantity of moves. And I think that's some very, strong data, to do for due diligence.
And I think when you're comparing Nashville to Pittsburgh, obviously each city has its own endearing qualities, but there's going to be less competition in cities like Pittsburgh, right? So there's that middle ground. Obviously, the top tier cities, push those to the side, and you can probably come up with like a ranking of top 50 cities in the U.S., that area from like 26 to 50. So that second half is really where you're going to see some of those emerging markets and be able to take advantage of it. Because of the less competition, there's also a higher cash flow opportunity when you're talking about finding exactly how far outside of a city to invest in, to consider that an emerging market. One, they get the luxury of being close to a city, but they get that suburban neighborhood lifestyle as well. So those are some of the most lucrative properties you can invest in because you have amenities close by, but you also have a very peaceful life potential as well.
Well, and look at the transition that Cincinnati went through from an industrial market to and if you can get there first, and it's not, you buy it when it's not pretty. And you build your portfolio around that, and then you watch some of these REITs all of a sudden recognize that potential. You can either stake your claim or sell your claim, but there's I think if you look at some of these emerging markets and really do your homework, I think you'll see, because I think the REITs are like, oh, how many more do we want to have in Atlanta? How many more do we want to have in Charlotte or Dallas? And again, everyone's looking to find, the higher cap rate. How can they improve upon their whole, their position and holding? And I think those are going to be some of, I'll call them sleeper cities, like a Cincinnati, a Macon, Georgia.
I'm glad you brought up the homework too, because it is somewhat of a gamble trying to predict like what market is going to emerge as a major player and, kind of basing it off of moving a little bit away from a bigger city. That's more of a sure bet, but it can be an extremely educated gamble if you're willing to do your homework. And you might not buy the prettiest property on paper, but, you can turn it into that. And then with the influx of people, now there's demand for your property, slap on some renovation work, fresh coat of paint, upgrading, appliances. And now you have a very desirable house in a market that everybody wants to move to.
Well, and look at the evolution of Detroit. And, and I know tariffs is a bad word right now and things that are happening. But if we look at some of the, the production that's expected to come back into the U.S., those are some markets I'd start taking a look at. This is on the horizon. Whether you like that concept or not, it's truly, Boeing and BMW are significant in Charleston, South Carolina. You look at the car manufacturers that have gone to Texas. So, see if you can, again, we'll talk about homework, find the market and where is the chip plant going? Where are some of these things, if we're bringing some of the, in Pittsburgh, you talk about Pittsburgh and steel industry, that could be a home run. Are you there, because they need housing for when these, and it's not today, it's 18 months from now when the plants are open and when these things are up and running. So get out in the forefront of this. And be the first one to stake your claim on some of these opportunities. I think they're great markets.
And it's not always our favorite topic to discuss, but if you want to bring it back to COVID and the pandemic, that unleashed a lot of trends in the real estate market that are still happening to this day, even, for 3, 4, 5 years removed from the peak of it. But with remote work becoming extremely popular, people realizing that was a bit of a reality check. There's lifestyle trends now. A lot of people have moved away from the major metros and want to find that work-life balance. And that's where the investors can tap into and really scoop up properties on the market that people are looking to move to.
Well, and so you look, being, I'll say, within 2 hours of the major metro. So, because a lot of people don't have to go in 5 days a week, but they may have to go in for 3.
Yep.
So if you could, can I drive from Maine to Boston, Massachusetts? I can get there in about 2 hours to Boston proper. So I could go down, leave the house at 6 o'clock in the morning and get there in time for my meeting by 9, and still handle the traffic, spend one night and come back and still be able to have what I have now.
Exactly.
And maybe get a house that you couldn't afford to buy, but you can afford to rent.
Yep.
So you're upscaling, you said, your living situation, you find some markets and your lifestyle choice. And I think COVID has actually taught the world, and certainly the US, that people can work from home and be productive.
Definitely. I think we're going to take our first break of the episode, but Suzanne and I have a lot more to discuss as it pertains to emerging markets. Stay tuned. We'll see you on the other side of the break.
See you soon. REI Inc. is the premier monthly publication for real estate investors. Dive into a wealth of expert insight and strategies from industry leaders and gain valuable regional market insights, ensuring you always have the best information at your fingertips. Visit rei-ink.com to elevate your real estate investment game today.
Welcome back to this week's episode of Uncontested Investing. Suzanne and I are discussing emerging markets today. And what we want to talk about next is indicators that a market in the U.S. can be emerging, right? So I think job growth in diversified industries, something that we touched on a little bit earlier, is definitely one of the biggest things. I think, cities such as Detroit and Pittsburgh, like you've mentioned, Suzanne, there's countless examples of that across the country where job growth really drives people to have to move to a city. And that's where investors should really be paying attention.
Absolutely. We expect, the car manufacturing in the U.S. to certainly ramp up quickly.
Yeah.
What markets should they be looking at? And I think, I think Detroit, even prior to this, Detroit, I think, is a good buy. I think there's some, and, there's zombie houses that are out there. You talked about not buying the pretty one,
Yeah.
but putting lipstick on it and,
Yes.
and making it more Cinderella than the actual pig. So I think there's a lot of things that we can do to research those markets.
Yep. The research is key. And I think another thing that investors need to tap into is areas in the country where housing is kind of stable and maintaining its affordability, but where rents may be going up. Those should have investors' ears perking up across the country, because that's where you want to get and secure the property at a decent price. But then year over year, the appreciation just starts to take off. And even maybe in year 1 or year 2, it's not the biggest return on investment. But by year 5 and year 6, if you can consistently keep a tenant, the sky is the limit in that case.
But there's a piece, we touched on, we talked about Charleston, and Boeing and BMW. But there's a piece that you need to make sure that you look at the whole picture there.
Yeah.
South Carolina has a significant upcharge on real estate tax for investment property. I'm not sure how that's allowable, because I think it becomes a subjective tax, and tax should never be subjective. But you look at that as a pass through to the tenant.
Yeah.
And so as you search these markets, Charleston is definitely a good market for the manufacturing, but there's a downside to that market because of the upcharge on real estate tax. So that's a piece of the equation, and some other things that you need to look at on your holding costs, and what because a $12,000 uptick in taxes is $1,000 a month to your resident, and maybe not worth that stretch for either for the resident or for you.
Yeah. And I think you mentioning that brings up a familiar phrase in my head of follow the money. So whether it's on like the local, state, or national level. So if you're seeing an infrastructure investment, right? So there's public transportation getting a facelift, trash services, they're trying to do initiatives to clean up the city. Things like that are kind of where investors want to follow suit, because in a few years' time, those areas finally become up to speed, become very desirable to live in, and you've already beaten people to the punch, and you're staking your claim in these territories where the population increase will follow because the money was invested to increase the living situation and lifestyle.
It's the old buy low, sell high. That's what you're doing. You're buying low and getting it in front of the game. And yes, there's a gamble, but you can hedge your bet by doing a significant amount of research. Look at the taxes. Is it a stabilized tax position, or are there different levels of tax? And even on insurance, are you in a market? And now in the country, you have to have your flood insurance. Is that house? And it's not necessary. A floodplain is not something on the ocean.
Yeah.
It could be something on a lake. We've seen what happened in North Carolina in the mountains. So we need to look at all the pieces that can tack on incremental charges.
Yeah.
Because that's really the true cost. And there's some hidden elements that are new to this game, like flood insurance that wasn't there last year, that we need to pay attention to.
Yeah. And I think one of the most underrated indicators left to discuss, I know you mentioned Cincinnati, so it's reminding me a little bit of Columbus, Ohio, but there are certain college towns across the country that are starting to mature into full-fledged metro areas, right? So people aren't necessarily going to college, moving back home and trying to start from there. They have a life built in that college town that they spent the last 4 years, and they want to stay in that area, in that suburb. A lot of these college towns are sprawling now, so it's becoming a more suitable place to live, not just attend school. So I think that's another indicator, right, of finding those little college towns across the country where it's starting to take on a life of its own and become bigger and better.
Sure, and there's certainly opportunity. A lot of the state schools, around, find the state schools, and mirror that. Those are the college towns that I think people are starting to migrate to as well.
Yep. And I think there's some strategies that are going to work extremely well in these emerging markets. I'll take the lead here and start off with the BRRRR strategy. It's something that we've certainly discussed on this show a number of times, but the BRRRR strategy in an emerging market is pretty much the best recipe for success if an investor can time it, right? So you're getting the property at a lower cost, you're doing the required renovation work, then you're renting it out once the tenants or the population increases, and now you have a beautiful property that a lot of people are vying for rather than potentially the ugliest house on the street, right? So the BRRRR strategy in an emerging market is certainly something for investors to keep in mind.
And you start adding those assets to your portfolio,
Yeah.
And now you can start borrowing against that as well, and using that to really grow your portfolio using your own equity.
Yep. And I think the short-term and mid-term rental properties as well has a place in this as we circle back to employment. So if there's people flooding into the market and they're not quite sure where they want to plant their roots, if they use your property as a stopgap for 6 months to a year to 2 years, and they rent out that property, that is a win for an investor because they're going to be able to churn out people in a similar stage in their life. And as they're migrating to a certain area for a job, they need to get their feet underneath them, figure out the area, and your investment property could be the perfect place for that.
But you can also, we've seen some tornado tragedies, we've seen some flooding tragedies, and fire tragedies. But that's also another short-term rental for people that are either going to go out, working for the federal government, helping to make sure some of the FEMA funds are done. So there's some short-term strategies that tie to disaster relief also. So you can almost follow, not that you want to follow disaster, but I think there's a way for
it's a viable strategy.
To follow it, because they need, someone has to be feet on the street to quantify what needs to be done. So again, another short-term strategy, but that's more on a 6 to 18 month versus 3 month on like a traveling nurse.
Yeah. And I think without question, obviously single family rentals are going to work in these markets when you talk about families moving duplex to quadplex. Those smaller multifamilies are always going to play in an emerging market. But one thing that came to mind too is families out there are trying to make vacations these days as affordable as possible. The world is becoming more and more expensive, so an emerging market could be a vacation destination that people are using as a backup. Maybe where they used to go is priced out, there's too much competition, everything's booked up. So if you can find those next level of vacation destinations, that can be an emerging market where now you can have a turnkey property, an Airbnb, something similar like that, and that is still a win for an investor. So it doesn't have to just be where can somebody rent for the next 30 years or have that family rental. It can also be on the vacation side as well.
Sure. If you can't go to the ocean, go to the lake.
Yep, exactly.
So there's a way to get there.
Yep. And we've been talking about it throughout the episode, but you always want to do your research, be educated when you're making these decisions. And I think there's tools out there. Roofstock is one of the major players. You mentioned census data. Census data is key for investors to be tapped into if they aren't yet. And there's even bigger pockets, market insights. There's data on Zillow. You can see what's been sold, what's been bought, what's been rented in a given area. And that can be a telltale sign where people are moving from and moving to.
And also, as a smaller investor, and even some of the mid-sized and larger investors, there are organizations like National REIA, National Real Estate Investor Association, or National Rental Home Council. Find some organizations that you can become a member of,
Yep.
and you'll have, folks that are more than happy to help mentor you in some of your decisions. Because, if you find a REIT that's also buying in Cincinnati, they have no problem helping you. Their buy box is more stringent than perhaps a smaller investor. But if you turn around and make your portfolio mirror what theirs is, they may end up buying your entire portfolio to subsidize theirs. So there's opportunities for even membership in organizations to help you be more successful.
Yep. And I think, we are going to circle back to the partnership and networking conversation. But two of investors' best friends, when they're deciding, is this emerging market going to come to fruition? Is this the right move for me? You really want to talk to the local people with the boots on the ground. I'm talking about realtors and even property managers, maybe general contractors. Get a sense for how fast the area is moving. How is it progressing? What are they seeing? And one of the most important metrics that I think a realtor can tap into is days on market. How fast is a property getting swept up? As somebody buying it? Is somebody renting it? If you can key in on those metrics, that can paint a very good picture of just how emerging a certain market is.
Absolutely. I mean, they may, have their ear a little closer to the ground, hearing what some of the things are. There businesses that are expanding or moving in there? Are there businesses that are leaving? You're going to get a feel for all of that.
Yep. And social media is a perfect spot for that. Try to find the metro, all the successful property managers, realtors are on social media now, advertising the work that they do for their potential clients. So if you can tap into some of their knowledge, their intuition and motivation, a realtor can be a very savvy and successful partner for a real estate investor.
But I think if I can give you, I'll say a parting comment or word, certainly do your research and find your network that can support it.
Yep. And there's opportunities all across the country, right? So there's not one recipe for success that you have to get to tomorrow or else the emerging market disappears, right? There's so many opportunities across the country. Suzanne, I think we had a great conversation revolved around emerging markets. If the audience wants to leave any comments where they've experienced success from an emerging market in the past, we'd be happy to hear that on LinkedIn or on our YouTube channel. But for Suzanne Andreessen, I'm Nate Zielinski. We will see you on the next episode of Uncontested Investing.
See you soon.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.